But let's focus on a couple of companies now. Jindal Saw, in fact, came out with what was a good set of numbers. Revenue was up 11%, the profit was up around 37%. And we have Neeraj Kumar, the Group CEO, who joins in to discuss this quarter's performance. Neeraj, hi, thanks very much for taking the time out. If you could just tell us what exactly were the volumes and realizations in terms of your key segments?
Good morning to all of you. Third quarter, as you would notice, is 3 quarters in a row of consistently good performance. And it's actually a result of all the 4 divisions working very well in tandem, margins improving, which is reflected in the increase in EBITDA as well as PBT. And we have now at least a visibility of a few quarters ahead of us. So all segments at this point of time are doing good for us.
Can you just provide more color in terms of the segments? I mean, how much growth did you see in your saw pipes, ductile pipes, pellets, seamless tubes and pipes, and geography-wise as well?
Okay, first let's look at the geography. At present, we have 30% exports. That trend is likely to continue. In fact, we are seeing some traction in the MENA region, where the reconstruction of Iraq has begun. Saudi is seeing some demand, and we are opening some new markets in Africa. Domestically, GAIL, ONGC both seem to be having some orders, which is going to give us a healthy order book. As you all know, we have commissioned our 16-inch mill in the seamless segment. That's a significant achievement, or that's a significant landmark when it comes to addressing the full range requirement of ONGC. DI continues to be stable. In fact, the DI market over the last 12 months or so has been very stable on account of the government infrastructure spending. And in the MS segment, the water, the EPC, linking of canals, all of those is giving us a lot of traction. So we have a healthy demand. In fact, our order book at present is in excess of $1.1 billion. And we do see a lot of businesses on the horizon in all our segments. Pellet is doing well. In fact, as you see, the pellet prices have stabilized, and we are making good margins there.
So, considering the kind of momentum that you're seeing, can you give us a sense in terms of what the revenue guidance for the company would be? I think your 9 months revenue has in fact surpassed your full year annual revenues of FY18.
Yes, this trend is likely to continue for the 4th quarter as well, because typically 4th quarter has always been a good quarter for Jindal Saw, because we address a lot of government clients where the budgetary allocations etc. come in. So 4th quarter we will definitely continue this, and as I mentioned to you, based on the order book and the visibility we have, we definitely believe that this momentum should continue for the next 3 quarters based on our current order book. And if the trend continue, then we have a consistently stable performance for Jindal Saw in the near term.
Sure, Mr. Kumar, just before we let you go, just give us a sense in terms of what exactly your consolidated debt on books is right now, and considering that you're seeing this momentum on your business, what would be the plan in order to reduce your leverage?
If you look at our Jindal Saw standalone loan, that's about 4,000 crores, 2,000 crores or little less than that in the terms loan, and 2,000 crores plus in the working capital. So working capital loan essentially is a function of the business. As the business goes up, the loan is likely to keep in line, but the term loan has been consistently coming down. Now if you look at the consolidated picture, because we have desubsidized most of our other businesses, that would at present stand at around 5,000 crores, but it's important to note that none of the subsidiaries or group company loans are being serviced by Jindal Saw. All those businesses which are there, now they throw cash and all the loans are being serviced. So yes, it's important to have a view on the consolidated debt, but it's also equally important to note that the cash of Jindal Saw is being conserved and is being used primarily for Jindal Saw. Not a penny is going to the subsidiaries to service their loan. But overall loan also has now come down to less than 5,000 crores on a consolidated basis.
Okay. All right, Mr. Kumar, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the management of Jindal Saw. Just want to point out mid-cap index now low point of the day, along with the Bank Nifty, which in fact is also down around 1.4%, courtesy stocks such as ICICI Bank. In fact, numbers also for ICICI Bank come out this week.